Ever buy a product at a loss, just hoping to make it up later?
Oh, yeah.
Well, that's ROKU's game, and we're diving deep into it today.
Interesting.
From those little streaming boxes to their whole platform strategy, we're going to see if OKU is a buy, hold, or a hard pass for value investors.
Yeah, it's a lot more than meets the eye. We'll cover everything from their business model and financials to the management and what the whole market thinks of them.
And later on, you're going to reveal something that might surprise even the most seasoned RKU watcher.
I think so.
All right, so let's start with the basics. Most folks know RKU for those little streaming sticks they sell.
Right.
But their business is really split into two segments. The player side, where they sell the devices, and the platform side.
Yeah, the platform is where the real story is.
Okay, so RKU is actually selling those players, sometimes at a loss even,
Often at a loss.
just to get market share.
Yeah, they're aiming to get those devices into as many homes as possible.
But the platform, that's where they're hoping to cash in.
Exactly. Think of it like RKU is the operating system of your TV.
Like iOS or Android on your phone.
Right. And they make money through advertising on the platform subscriptions that happen through their system. They even license their technology to other TV brands.
Oh, wow, so they're everywhere.
And they have their own channel, too.
The Roku channel.
Yep. You got a mix of free and paid content.
So they want to be that one-stop shop for your streaming needs.
Exactly. And the cool part is they're not just pushing their own stuff.
Right.
They offer subscriptions to Netflix, Amazon Prime Video, Disney, plus all the big names.
They're playing the field.
What's interesting is their strategy is to be a neutral platform.
Smart.
They don't make their own content so they can partner with everybody without competing directly.
Yeah, so they're not stepping on anyone's toes.
Gives users a huge, diverse library of content.
So that's the ROKU edge.
You could say that.
But it's a crowded space out there.
It is.
You got Amazon Fire TV, Apple TV, and now even Samsung and LG smart TVs have their own built-in operating systems.
Oh yeah, they're all in the game now.
How does RKU manage to stand out in all that?
Well, that's a good question. A lot of it comes down to user experience. RKU's interface is super user-friendly, even for people who aren't that tech-savvy.
Yeah, I've used it. It is simple.
And that's a big deal when you're trying to reach the widest audience.
Okay, so they've got the platform.
Yeah.
But even with a great platform, you still need someone at the helm steering the ship.
Right.
So let's talk about the management team.
Yeah.
Anthony Wood, RKU's founder and CEO, what's his track record like?
Well, Anthony Wood, he's been in tech and media for a long time.
Seasoned?
Definitely. He's a seasoned entrepreneur. He's led RKU through some pretty impressive growth and some major changes in the industry.
RKU's been around a while now, hasn't it?
Yeah, they've been through a lot.
So the whole management team is experienced then.
Yeah, you could say that, but the interesting thing to look at is their capital allocation strategy.
What do you mean?
Well, they're focused on taking their profits and putting them right back into the business to grow even more.
Instead of giving dividends to shareholders.
Exactly. They're really in growth mode right now.
They've made some interesting acquisitions too, right?
Oh, yeah, for sure. Like Detaxu.
And that Quibi content library.
Yeah, those are big moves.
So the Detaxu acquisition, that was to boost their advertising game, right?
Exactly. They brought that programmatic advertising technology in-house, which gives them more control and could really pump up their ad revenue.
Makes sense. So they're not just sitting back waiting for more users. They're actively finding ways to make more money from the ones they've got.
Exactly. It's all about maximizing that platform.
Speaking of money, let's look at the financials.
Okay.
RQ's market cap is around $12 billion right now.
Yeah, it's a pretty impressive number.
Sounds good, but I hear they haven't been consistently profitable.
That's true.
Still in the red.
Well, they're still investing heavily, prioritizing growth over profits right now.
Makes sense. But don't value investors want to see those profits?
Of course. But they do have a healthy cash position and a low debt-to-equity ratio, which gives them some flexibility.
So they've got room to maneuver.
Right.
But still those negative profit margins, it's got to make some investors nervous.
It does, especially those who are looking for consistent returns.
But their revenue's growing, right?
Steadily.
Yeah.
But yeah, those negative margins mean they're spending more than they're making at the moment.
So analysts are projecting strong earnings growth in the future, though.
Yeah, some estimates are saying 20 to 30% annually.
Wow, those are some big numbers. But are they realistic in such a competitive market?
That's the big question, and that's what we'll dig into in the second half of this deep dive.
We'll be looking at market sentiment, ownership structure, and risk assessment.
It's going to get interesting.
Definitely one to watch.
For sure.
Okay, so we've covered a lot of ground already with RKU. They're business model management, their financials.
Yeah, we've got a good picture starting to form.
But now we're shifting gears. We're going to talk about how the market actually views ROKU.
Right.
Sentiment.
What's the overall feeling on Wall Street? Is it thumbs up or thumbs down?
Well, it's kind of a mixed bag.
Really?
You've got some analysts who are super bullish on ROKU.
Okay.
They see them as like a dominant player in this whole connected TV market.
TV.
Yeah.
Exactly. I've heard that term thrown around a lot.
Yeah, and then you have other analysts who are more cautious.
What are their concerns?
Profitability, mainly competition. The fact that they rely so heavily on advertising revenue.
Yeah, we talked about that.
It's definitely a concern for some.
So for those who might not be as familiar with this world, can you explain what CTV actually is?
Connected TV.
Right.
It's basically any TV that can connect to the internet and stream.
So smart TVs, gaming consoles.
Yeah, and of course those streaming devices like RKU.
Okay.
And this whole CTV market, it's just exploding right now.
It seems like everyone's streaming these days.
Exactly. And RKU, they're right in the middle of it all.
So it sounds like RKU is kind of this classic growth versus value dilemma. Yeah, I think that's a good way to put it.
They have this huge potential for growth, but there are those lingering questions about their profitability.
Right.
So what are some of the specific worries that investors have brought up?
I think a big one is competition, especially from those tech giants like Amazon, Google, Apple.
Right. Those are some deep pockets.
Exactly. And they're all investing heavily in their own streaming platforms and devices.
So Amazon with their Fire TV, that's direct competition for ROKU.
Absolutely.
It's a tough battle.
It is. How does RKU plan to stay competitive against all that?
That's what I'm wondering.
Well, a big part of their strategy is that platform agnostic approach.
Okay.
They don't have their own streaming service to push, so they can partner with everyone and give consumers more choices.
Okay.
And then there's that user experience that we talked about.
It's simple.
It's super user-friendly, which is a big draw for a lot of people.
Makes sense. But that reliance on advertising revenue, I mean, that can be a risky business.
Oh, yeah, it can be volatile for sure.
The whole advertising market goes up and down. It's affected by the economy, changes in consumer behavior.
Right.
So if advertisers start cutting back, RQ's income could take a hit.
Definitely something for investors to consider.
So there's risk, but there's also potential for big rewards.
Absolutely.
Okay, so let's talk about the investors themselves, who are the big players holding RK stock.
You see a lot of institutional ownership in RKU, big firms like Vanguard.
Okay.
Kathy Wood's ARK Invest.
Those are big names.
They're holding substantial chunks of the company.
That's a vote of confidence.
It is sophisticated investors. They believe in RK's future.
But what about insider ownership? Are the people running the company putting their own money in?
Well, insider ownership, it's relatively low compared to those institutions. It's not necessarily a red flag,
Okay.
but some investors might see it as a sign of caution.
Right.
There has been some insider selling lately, too,
Really?
which can make people nervous.
Understandably.
But you have to look at the context, the reasons behind those sales.
Right, it's not always a bad sign.
Exactly.
Okay, so we've got this mix of institutional and individual investors. And they all seem to have different levels of confidence in OK's future.
Yeah, it's a complicated picture.
It is. So to try to get a better handle on the whole situation, let's do a SWOT analysis.
Okay.
Strengths, weaknesses, opportunities, and threats.
Classic.
So let's start with the strengths. What are OK's biggest advantages in this streaming world?
Well, a big one is that they're the market leader when it comes to CTV operating systems.
Okay.
They've got this huge engaged user base, over 90 million active accounts.
Wow, that's a lot of people.
It is. It gives them a lot of leverage when they're dealing with content providers and advertisers.
So they've got that strong foundation to build on.
They do.
What about the platform itself? What makes it stand out from the competition?
Well, it's known for being user-friendly.
Right.
It offers a huge selection of content, and it's got a really robust advertising platform.
They're covering all the bases.
And they've also been investing in original content for the Roku channel.
They're making their own shows.
Yeah, they're trying to differentiate themselves that way.
Interesting. So they're not just a platform for other services anymore. They're creating their own stuff.
Right. They're trying to become a content destination themselves.
Okay, so strengths, we got them. But
Yeah.
what about weaknesses? Where does RKU fall short?
I think a major weakness is still that dependence on advertising revenue.
Right. We talked about that.
It can be unpredictable.
Yeah.
They also have a pretty limited international presence compared to some of the bigger players.
So they're mostly focused on the U.S. market.
Yeah, they are expanding globally, but it's tough to break into markets that are already dominated by other companies.
Yeah. Breaking into new territory that can be costly and time-consuming.
It can be.
Any other weaknesses we should know about?
Another one is their reliance on those device manufacturers and retailers to actually sell their streaming devices.
Right. They need TCL and Hisense to make those ROKU TVs.
Exactly. They have partnerships with those brands, but they're still dependent on them to actually get the hardware into people's homes.
So they've got to maintain those relationships.
They do.
All right, so strength, weaknesses. Now let's move on to opportunities. What's out there for RKU to grow and expand?
Well, the CTV advertising market, that's a huge opportunity.
It's booming.
It is, and ROKU is in a good position to grab a bigger piece of that pie.
Yeah.
They're always coming up with new ad formats, new targeting capabilities to attract more advertisers.
So they're not just passively riding the wave, they're actively trying to shape the market.
Yeah, they're definitely playing an active role.
What else is out there opportunity-wise?
International expansion is a big one.
Right, going global.
Yeah, it's a challenge, but there's a lot of potential there, especially in emerging markets where they might not have as much competition.
Tapping into those new audiences.
Exactly.
Anything else?
They could also look at new revenue streams beyond advertising and subscriptions.
Okay, like what?
Maybe offer some transactional services?
Okay, or even get into e-commerce.
Wow, so they're thinking outside the box.
They are, yeah.
Okay, so we've got strengths, weaknesses, opportunities. Now it's time for the threats. What are the biggest challenges and risks that RIKU is facing?
We talked about competition. That's a big one. Those tech giants, Amazon, Google, Apple, they're not going away.
No, they're not.
They've got huge resources, and they're constantly innovating. So RKU has to stay ahead of the game.
It's a constant race.
It is.
So competition, that's internal, but are there any external factors, industry-wide threats that could affect ROKU?
Oh, yeah, for sure. Yeah, the whole regulatory landscape for streaming, it's constantly changing, and new regulations could really throw a wrench in RKU's plans.
Yeah, like what kind of stuff are we talking about?
Well, data privacy, that's a big one right now.
I hear about that everywhere.
And it's getting more and more attention.
Yeah, people are concerned about how their data is being used. Exactly. And if there are stricter rules about how companies can collect and use data, well, that could limit RKU's ability to target their advertising as effectively as they do now.
Yeah, that would be a big blow to their business model.
For sure, it's something they have to be prepared for.
So data privacy, that's one thing. But are there any other potential threats out there on the horizon?
Well, another risk, and this is always a possibility, is that consumer preferences just shift.
Away from streaming.
Yeah. I mean, it's super popular now, but there's always a chance that something new comes along, some other technology, some other entertainment option that disrupts the market.
Right. It's like that old saying, what goes up must come down.
Exactly. Nothing stays on top forever.
Not even in tech.
Definitely not in tech.
So we've talked about the good, the bad, the ugly when it comes to ROKU.
We've done the whole SWOT analysis.
We have. So what's the final verdict?
The million-dollar question.
Is RKU a good investment or not?
Well, if I had a crystal ball, this would be a lot easier. It's tough to say for sure.
It's not a simple yes or no.
RKU definitely has a ton of potential.
No doubt about that.
They're in a fast-growing market. They've got a solid platform, a huge user base, a smart management team.
We covered all of that.
But they're also facing some serious competition.
Like we said, Amazon, Google, Apple.
They're relying heavily on advertising revenue, which can be unpredictable.
Right.
And this whole regulatory environment, it's always in flux.
Yeah. Things are changing fast.
It's a lot to keep track of.
It is. So for investors, it seems like RKU is one of those high-risk, high-reward kind of plays.
Yeah, if you're comfortable with a little volatility, if you're thinking long-term, RKU might be an interesting opportunity.
Okay.
But if you're more risk-averse, if you're looking for steady, consistent returns, maybe it's better to wait and see how things shade out.
Play it safe for a while.
Exactly. Let the dust settle.
Now, for that surprising fact you promised us earlier.
Oh, yeah. I almost forgot.
You said there was something about RKU that most people don't realize.
Right. Well, did you know that RKU's operating system isn't just for their own devices?
Wait, really?
Yeah, other TV brands use it too.
Like who?
TCL has sent some of the big names.
So you could be using RKU software without even knowing it.
Exactly. It just shows you how much influence they have in this market.
It's not just the little boxes anymore.
Nope, they're powering a huge chunk of the smart TV ecosystem.
Wow, that is surprising.
Yeah, it makes you think about their reach in a whole new way.
Yeah, it does.
RK is more than meets the eye.
Well, this has been a fascinating deep dive into the world of RKU.
Yeah, it's a really interesting company.
A lot to consider for investors.
A lot of moving parts.
So what do you think is RKU, a stock you'd add to your portfolio?
You'll have to decide that for yourself.
Right. No financial advice here.
Just information to help you make an informed decision.
Exactly.
Yeah.
So let us know your thoughts in the comments below and tell us what other stocks you want us to analyze in future deep dives.
We're always looking for new ideas.
And if you want more data-driven insights, don't forget to subscribe to the Stock Analytics AI YouTube channel.
We're breaking down all the latest trends in the market.
Thanks for joining us.
It's been fun.
Until next time, happy investing.